This video I haven't edited much. It's just whatever came to my mind I spoke without editing much. Like usually I structure my thoughts and then I speak for 2 minutes again, then I will structure my thoughts and again will speak for 2 minutes. So like that I shoot the other videos, but this video is very raw, so you can watch it at 1.5x or 2x, whatever suits you. Just basic general concepts I have covered, like at which point which fund invests, like early stage venture capital, then late stage venture capital funds, then private equity, and then after IPO hedge funds comes. So that's what I have explained. Welcome. Today in this video we are going to learn about how a journey of a company goes through. Suppose we are taking a company which is very long term in its journey and which is going to scale into a very large company. Very few companies reach this kind of scale and sustain this long time. Like for example, we can take Zomato or Swiggy, or even Zepto now has survived till 5-6 years till this time, till in 2025 as of now I am talking. So the companies go through cycles. Like first, early stage VCs will invest in the company. So these early stage VCs, first of all, angel round will come. Let's say that was of 1 crore. Then there will be second round of 10 CR, let's say. So that will be called as a seed round. Then after that 100 CR round might start, which is called as Series A round. So first early stage VCs will fund it. Which rounds they will fund? This 10 crore, and might be Series A also they might fund, but rarely. Like late stage VCs will fund this 100 CR round and 500 CR round. So first of all, 1 CR was invested by angel investor. Then here early stage VCs will come in between 10 CR, 20 CR, 30 CR, like that they will invest. Then when it comes to bigger check size, 100 CR or 500 CR, then the late stage VCs will come. And now if you are going for bigger rounds, even bigger than this, then let's say you are going for a 1000 CR round, that is $100 million approximately, if we consider dollar as 100. So then these private equity players will come into picture. So they will come, their horizon is little shorter than the venture capitalists, because they are coming before IPO and after VCs. So they invest in companies which are very mature, like those who are doing 500 CR in revenue, and now they want to expand to 1000 CR or let's say 2000 crores. So here generally what happens is, like there will be mergers and acquisitions. Let's say you want to expand from 500 crore to 2000 crores in revenue. So that will be typically happening due to acquisitions. Suppose you buy out some 2-3 companies which are doing 300-400 crores in revenue, and like that you grow. So these private equity funds, what they do is they will give you $100 million or $200 million and like 1000 crores and 2000 crores, and they will want you to acquire companies, and soon after that 2-3 years later you do an IPO and give them an exit. So like that the private equity funds, their time horizon is little less than the VCs operate for 10 years, 10 year, 12 years sometimes. But private equity funds on the other hand, they are for 3-4 years. Means near IPO, the companies which are near IPO stage, only in those companies they will invest, because they are investing bigger check size, so they want a little lesser risk. Here you can't like 10x or 20x or 100x your capital. Here you can just multiply it 2x or 3x, because $100 million can turn into like $300 million or $400 million max, or even $1 billion at max 10x. But usually they play safe. Then the companies will do an IPO. So nowadays, as of 2025 when I'm shooting the video, now IPOs are coming of nearly $1 billion, which is 8,000 to 10,000 crores, whatever the price of dollar is, 85 or 86. So nearly this kind of range, huge money is taken by companies from the public market. So see, here till this point it is private market, it is called as private equity, and after this it is called as public market. So this is public equity then, because you are raising from the public. So this is private equity, this is public equity. So private market, public market, don't confuse it with this private equity. These are private equity funds, they are known as like that, but as a whole thing this is called as private equity, and this is public. So private markets, public markets. So when the company enters a public market, nowadays the companies are doing $1 billion worth of IPO. PhonePe, then Grow, they are doing this kind of huge IPOs. Even small and medium enterprises also do IPO, but their IPOs are very small, like 100 crore, 200 crore. So they are not taking money from venture capitalist or like that. So those IPOs are different, but nowadays these IPOs are doing this much, like the size is this bigger. And like that, a company goes through this cycle and then becomes big. But very few companies go from like 1 CR and reach to a scale of 10,000 crore, that is $1 billion. So Zomato is now doing nearly $2 billion in revenue, 2 or $2.5 billion, not telling absolute numbers, approximate. So that's how a company goes. And if you haven't watched the earlier video that how a startup scales, then you should watch that. And this is what just I wanted to cover, like when which companies will come, like we venture capitalist, early stage, late stage, then private equity, and then IPO. Then see, here hedge funds will start coming, because this is now secondary market. So after IPO, like IPO is a primary market, then in that secondary market, which is where the shares are traded, then hedge funds will come. First of all, to do IPO, investment banks will come. They will do the IPO, they will draft the papers and they will file for it, and then they will do all the setup, underwriting, everything. Then once the IPO is launched, investment bank's task is over, because they help in underwriting, valuation, and all those things. Then hedge funds will come. Then they will start trading in the stocks of these companies. And this is how whole funds work: early stage venture capital funds, then late stage venture capital funds, then private equity funds, and then hedge funds. So all the funds I have covered here. Other than these, there are real estate funds and various asset classes funds. So but in that thing I'm not going to go. So that's it. So whatever I told, like 1 CR, 10 CR, then 100 crore round, then 500 crore rounds, and then 1000, 2000 crores, then at IPO 10,000 crores. So this I told, you can take in Bangalore, this happens usually. So it differs from country, means country to country, and even location to location, because there is a concept called PPP, purchasing power parity. So suppose in Bangalore you want to open one dark store, it will cost 1 to 2 crore or even 3 crore to open one dark store of Zepto. So if you are trying just the idea you wanted to try, then you will need 1 crore at least. Then in 10 crore you might open 3 stores only, 3 4 stores only. First initially you will open a 1 CR store, then 3 4 stores. But if you go in tier 2, tier 3 cities, even a 40 lakh store is big enough, or even a 20 lakh store will be in tier 3 cities, will be a big store. So dark store or whatever, grocery store, DMart kind of store. So this is, means it varies according to the purchasing power parity of every city, every country. If you go in US, then these early stage VCs, they will invest like $10 million, $50 million. So these are huge rounds, like, because they need that kind of money. And even in seed, means OpenAI and all those companies, they are raising like billions of dollars in their seed rounds. So because they need that kind of investment according to their PPP, so these numbers are just approximate numbers. These are not some fixed numbers like only this much they can raise in this round. It's not like that. These are just stages of company. Even a series A round will be maybe 1,000 crores, or even a series C, D round might be of 100 crores only. So this is just according to the needs of the company, where it is operating, in which location. So everything differs from PPP, and even inflation might add up. Let's say you are watching this video after 3 years. So as inflation rises, these round size have to rise, means because they will need more money to open that even 1 store, 2 store. So that is what it is.